Yesterday you were in Abu Dhabi. Why were you in Abu Dhabi and not here to keep me company?
Good question. Good question. I mean, I would say in Abu Dhabi there was a lot going on, right? With ADGM and their announcement. Also, Stacks officially got for the STX token the ADGM license.
Nice.
I don't know exactly what it means, but it probably means that a lot of people who couldn't buy STX before can. So that's always great.
Yes, absolutely. I know that you've got great relationships between Stacks and obviously stacking DAO by proxy with Hex Trust, which is one of the leading custodians here, which is licensed with Vara. So you guys are making move in the Middle East, which is great. Tycho, you are the founder or co-contributor, some people may say, of Stacking DAO and Zest. Today we're talking about Stacking DAO, which is the leading liquid staking solution of Stacks. Sometimes I do join your weekly DeFi show, right?
Very happy
And
about
sometimes
that.
you ask the questions. This time I'm the one asking you the questions. So amazing experience. Finally, I can take it all back. And so I'm gonna start with a very hard one, which is when is Stacks gonna hit new all-time highs?
Well, usually tokens, do well, right, when people buy them. And people buy tokens because they believe in the future of the project, right?
Mhm.
Now, I think and this is like not financial advice, this is not market commentary, any of these things. This is just sort of, my view or a view that anyone could have, right? Is we're in a Bitcoin cycle. BTC very clearly has product market fit, right, amongst institutions. It trades similarly to gold, right, on global liquidity, which I think you've been talking about a lot.
Too much.
Maybe, yeah, exactly. The overlay charts of global liquidity and
I skipped
then BTC price. So Bitcoin has product market fit, right? And a lot of other things don't, but Bitcoin has. And Bitcoin innovation or Bitcoin programmability, of course, also has, some degree of product market fit in that environment, because for Bitcoin to continue to exist, there needs to be the organic demand for block space. Halving after halving, someone needs to start paying these fees. And I think that it's become quite clear that this is going to be programming layers that do something with BTC or do some kind of computations outside of Bitcoin and then use Bitcoin as a settlement layer. And Stacks is the first project that ever did that. Stacks has been working on this, or Munib, right, the founder of Stacks, has been working on this vision for over 10 years, right? Went to Y Combinator in summer of 2014 with this kind of idea, pivoted a few times into Stacks as a Bitcoin L2 or Bitcoin layer as it is today. So in a market where BTC does very well, there's a lot of potential for Bitcoin innovation to do very well. And when it comes to Bitcoin innovation, there is no project other than Stacks.
Yeah, I agree with that. It's hard to disagree, actually. Okay, so we started from Stacks. Now, why liquid staking on Stacks?
Yeah, why liquid staking on Stacks? So just a bit of history, right? So I was part of the Stacks core team, right? I was essentially, leading a lot of product work that led into SBTC and the Stacks Nakamoto upgrade, and then spun out to build Zest protocol, right? To do BTC collateralized loans, right? To take full advantage of SBTC and the technology that Stacks offers, right? This non-custodial way to move BTC from L1 to L2 and use it as collateral. And then we thought, wait, it would be really great if we could also take STX collateral. It would be great for the network. But then, of course, we were like, well, it would be even better if people can stake their STX, which is very high yield, right? 8, 9, 10%.
Mm-hmm.
And then use that as collateral. And that's kind of when the idea for liquid staking for STX was born. Of course, it's not rocket science. Liquid staking already existed, but it was very difficult to do on Stacks for the way that staking works, because staking on Stacks is very complex because Stacks is anchored to Bitcoin. And this kind of anchoring is obviously not something that Solana has or ETH or Sui, which means that the way that staking works, or stacking on Stacks, is actually super complicated. So liquid staking was never possible. It only became possible with a tech upgrade that happened in summer of 2023. And then, we latched onto that, built the protocol, and or rather, Philip and Neil built the protocol. When they came to launching it, they were like asking me, well, can you maybe help with some business development and so on, and now we're here today.
Is Phil the brain behind it, and are you just a pretty face?
I mean, Philip and Neil are very big brains. I like to think I've got a decent brain myself. But
Yeah, multiple founders, etc. No,
yeah.
it's just a
No,
joke.
but he like to. So Philip and Neil, who are the technical brains in that sense behind stacking now, they ran a stacking pool since summer of 2021, right? So since the start of Stacks mainnet, pretty much. So they had a lot of experience with like all the operations that go behind staking STX, and making sure everything is safe, everything is secure, et cetera, et cetera. So there was like that, history and that experience that sort of could hold into it.
So since you were born, now it's been almost a year now that you've been live, right? Oh, the same day. The liquid staking solution, the liquid stacking solution, not yourself, Tycho.
Yeah.
I think we're pretty much the same age. But since stacking now has been live, now it's been a year, give or take, right? And you have experienced a lot of growth. And the thing that I think you're maybe the most proud of is the number of STX that is being stacked and liquid stacked, if you will, right? So can you walk us through the growth exactly? How did that go? Because we've been through a pretty bad market, but you're still reaching new all-time highs in terms of units?
Yes, in terms of units of STX, it's pretty much a straight line up and to the right. Yeah, it launched in, December 2023, right? I mean, it started really getting traction in like January, February 2024, right? So last year. Would say it grew sort of within the first half a year to about 50 million units of STX, right? At that time, STX also went to $3.80, right? So this was, nearing $200 million of TVL. Of course, since then, STX went down, but the units of STX kind of kept increasing. And then more recently, so initially our first product, right, was staked stacks, which is you stake STX and it yields STX. However, when you native stake STX, it yields BTC. And when SBTC then launched on Stacks in December of last year, so, call it 5-6 months ago, we also then were able to launch a new LSD called Staked Stacks BTC, which is staked STX that yields SBTC on Stacks. And that product has attracted a lot of new capital because there was a lot of capital on the sidelines that wanted a liquid token, right, for their staked position, but that didn't want to give up on having BTC yield. And I believe we're probably one of the first or only LSDs in the world, right, that has a yield in token that's not the staked token. So most of our growth, most of Stacking Now's growth today comes from that new staked stacks BTC product. Next to that, Stacking Now also has native stacking. It's still quite small, but it's the only pool that's zero fees in the entire ecosystem. So if people want to lock up their STX for a long time and just native stack, there's also that option. We expect a lot of growth from that too. But for now, the real driver has been the SBTC yielding staked stacks BTC.
Well, it's not bad to earn some BTC, that's for certain. So Stacks over the last year, as you basically already alluded to, has been undergoing quite a few changes, namely the Nakamoto upgrade, which completely revolutionized the way the blocks are produced and everything. It's much faster now. Transactions are very clearly added to the block. And I was just thinking about this because you just mentioned it, but SBTC. So SBTC has had tremendous success. We are one of the signers actually of SBTC ourselves. So it's Restake, rebranded to Swag now. Always plugging that in just in case. What is SBTC, Tycho?
So SBTC is essentially a wrapper for BTC for Bitcoin that lives on Stacks. So when you have BTC on Bitcoin in your ledger or your wallet or whatever, you can send it to an address on Stacks, and then it will live on Stacks as SBTC. And the underlying BTC, so this is of course one-to-one backed, you can get out whenever you want. And the underlying BTC is held by all the validators on the Stacks network, such as Swag, such as Stacking Now, as many others, like institutional ones and so on and so forth. I won't name them on this podcast for the sake of...
That's okay, we can say Hex, friends of the pod.
Exactly. And that's basically SBT. So there's been a lot of BTC wrappers in existence, right? WBTC,
Exactly. I was gonna get that. Yep.
a lot of things coming, but essentially SBTC was a bit like something that kind of came out of a collaboration between like me, Monib, and some of the core engineers like a couple of years ago, where we're like, we want a BTC wrapper on Stacks that is the cheapest, fastest, and the best. That's like the three areas you can compete on, right? And it's the cheapest because it's free to mint. So you can, you mint one SBTC with one BTC, you get one SBTC. No fee, nothing. Just the blockchain, transaction fee. It's the fastest because within one confirmation, you have your SBTC on Stacks. That's because Stacks is anchored to Bitcoin, so it doesn't, and Bitcoin reorgs, Stacks also reorgs. If you mint a TBTC on Solana or something, you have to wait 6 Bitcoin blocks, which is like an hour or can be more, right? So it's the fastest because of the way that Stacks is architected, and it's the best because Stacks forks when Bitcoin forks. So essentially, you have Bitcoin security after every Bitcoin block, and that's like a unique product in this space, a unique Bitcoin wrapper in this space, and something you can build like uniquely great products with.
And there's been a pilot, right? And then it was capped at a certain number. What was it, 3,000 units?
Yeah, that's right. So the first cap for SBTC was just 1,000. Then late February, there was cap 2, it was 3,000 SBTC. And probably quite soon, we will see cap 3. And at some point, fully uncapped.
Why is it capped? Do we want to stress test this technology? Like, what is the rationale behind it?
I would say, yeah, stress testing the technology is definitely one, right? Withdrawals are not open yet. I think they are opening in a couple of days. So probably when people see this, withdrawals are live and kicking. But yeah, the system was initially, done with a cap, without withdrawals, just to stress test things as they go.
Yeah, makes sense. Okay, where can I use this SBTC?
So SBTC, you can use, on Stacks for one, you can send it around and it will confirm within like a couple of seconds, right? So you can use it to transact with people and so on. I think that will be a very big use case for it because, Lightning is not as nice as people would like it to be, and that can be something better. So that's obviously one use case. Next to speed is obviously programmability. Like a Stacks is a smart contract platform. You can build smart contracts on Stacks. That unlocks a couple of opportunities. One very obvious one is locking the BTC as collateral, borrowing against it. That's what we do with Zest protocol. Currently, there's 470 BTC on Zest sitting there. Another one that's going to be very interesting and very relevant for our conversation is obviously going to be staking. Right? So staking of SBTC or BTC on Stacks to secure the network is probably going to become very interesting this year. There's nothing public about it yet, but
sign me up.
We're very excited about it.
Yes. Okay, very interesting. Tycho, you've done quite a few interviews in your life. You talk about this weekly. You've been on stage quite a few times yourself. Now, what is one of the questions that it seems that it's always been dodged, but that you wish you were asked a little bit more frequent, and you never get to talk about it, even though maybe it's something that you really care about, but you never get to say. You try to squeeze in it in some answers, but not really.
Yeah, I mean sometimes we do this. I do these learning from podcasts, and a lot of fun to talk about. Well, actually, why does any of this matter? I think. It's quite interesting to walk around here at Staking Summit, and where you could maybe call it Restaking Summit or Rehypothecation Summit by now, right? I think there are a lot of people in this space who maybe lost track slightly of why this matters or what they're exactly doing again. I think you empathize with that, so maybe that's something I would think about.
Okay, interesting. So you're just being cautious then. A word of caution.
No, not necessarily a word of caution. I think it's interesting to remember, like, why are we doing this, right? Like, maybe if I can ask myself the question, like, why is all of this interesting, right? Like, BTC staking, BTC as collateral, SBTC on Stacks, staked Stacks, BTC, staked Stacks. Why is this validators? Why is this interesting, right? And I think in the end, it's like, yeah, with Bitcoin is probably one of the most monumental or fundamental changes that is happening in the 21st century. I think AI and Bitcoin are probably the two most fundamental things that people will look back on the 21st century. Okay, that's what it was all about. And Bitcoin is a database, right? Bitcoin is a ledger, and we can log transactions into it, but we can also log other data into it. And when we make it the global computer for data, it can be the neutral plane for compute to live on, and the new neutral playing field for all world markets to be based on, and all of those things. So that needs programmability, and we need to build that, and we need to iterate on it, and not lose track of that mission.
Yeah. And last question for you, Tycho. This is completely improvised. Okay. Well, everything else has been improvised. I think that everyone can tell by now. But there's been a lot of talks, at least in the couple of days that I've been here and with the people that I've met at different events and everything, about privacy. Have you ever been giving some thoughts to it in regards to, for example, I was speaking to this project. It's called Decipher. They are adding privacy to transactions, like by encrypting certain variables or tokens, etc., and then processing the transactions with those tokens encrypted so that you can't see who's sending whom what, right? And when I was talking to the founder of this project, he asked me, do you think there is a need for privacy in staking? So when you do a staking transaction, or stacking in this case, or liquid stacking in this very particular case, do you think there is a need for that? Does it depend whether it's an institution or a retail participant, for example?
Well, I think it would be nice. So usually, right, there's a lot of delegated staking, right? And people delegate to a validator, so they probably want to know who that is, right? Or because the validator is making the blocks, or are they making good blocks, or are they going to be bad for the network? So in that sense,
But
it matters a lot. But
do you think it's important? Yeah, of course the validator needs to be public, but do you think there is a need for protecting the privacy of the user that is actually making the transaction to stake? So you, for example, let's say that in the future your wallet is doxed, right?
Right.
So your public key is doxed, and everyone is just checking your account, and they want to sandwich you. In the case of CZ, for example, right? Or maybe you're just an institution and your public key got leaked, so be it, right? But now they see all the time what you're up to, right? And they see, for example, at some given point in time, you're not holding your STX, for example, but you are stacking. Is there a need for privacy to say, no, I don't want to disclose this type of information. I want to keep it private. The amount of STX that I'm stacking, for example.
I think it would make a lot of sense for just generally more privacy to be introduced, right, in blockchains. And just the tricky thing is that a blockchain is essentially a public ledger, so it is not. It's a feature that it is all public. It's kind of in the name.
Would it be nice if there was a solution that fixed that, though?
I do think so, but I think it will come once the problem becomes big enough, because you can sort of make sort of layers under layers where there is sort of a private level of compute, and you can kind of come out of that into a new address and proof. You don't really know who it is. I mean, I guess people do this today sometimes by sending money to a centralized exchange, right? Just generate a new deposit address and on Kraken, send it there, and then send it out, and it's that kind of fresh start.
Yeah, it's time consuming.
This can be, it can be tracked, of course.
You keep track of 75 different wallets. You've got burners.
Oh yeah. But I think something like this, but then not, using a centralized exchange, but using some other service that is not like Tornado Cash, right? That's not sanctioned.
They can't say.
Would make a lot of sense, and it's just a problem space I haven't spent a lot of time in, but I think once this starts to get used more and more and more, it will become more.
Yeah, we can probably think about that. The guy was telling me that they're open to explore options on different chains, and we do operate on many chains. So maybe there is something to be done there, and I'll let you know if that's the case.
Fantastic.
Very good, Tycho. Thank you so much for your time.
Yeah. Thanks for
nice for once, to ask you questions instead of getting roasted publicly on X basis for nothing.
Appreciate it. Good.